Hi, I'm Andy Panko, owner of 10 in Financial. Welcome to Retirement Planning Demystified. If you've ever looked into certain retirement, tax, and financial planning topics like IRA or Roth IRA contributions, Medicare premium surcharges, Affordable Care Act insurance premium subsidies, or how much of your Social Security is taxable, you've almost certainly come across the term Modified Adjusted Gross Income, or MAGI. And yes, I call it MAGI, but I don't think there's any sort of official source saying you can't say MAGI or MAGI. To each their own, I guess. Anyway, there is no single definition of MAGI, as there are actually multiple MAGIs used throughout the U.S. tax code. There are about a dozen different MAGIs that I'm aware of, and there are likely even more than that. In this video, I'll walk through the 6 that you're most likely to come across in planning for your retirement. And if you like this video, please be sure to subscribe to this channel and click the little like thumbs up icon below. Thank you. Before we start, remember this video is only general explanations and education. It's not specific tax, legal, or investment advice. Before considering acting on anything you see in this video, first consult with your tax, legal, or investment advisor. As the name implies, MAGI is a modified version of your adjusted gross income. It's used in different areas of the tax code to determine your eligibility to do or not do certain things, or to be able to take or not take certain deductions, and so forth. Adjusted gross income is shown very clearly as its own standalone line item on your tax return. Adjusted gross income, or AGI, is essentially all of your gross income plus or minus certain adjustments, such as the deduction for making contributions to traditional IRAs. AGI's location on your tax return may change a bit each year, but for the 2020 tax year, it's shown on line 11 of Form 1040. On the other hand, all these MAGIs I'm about to discuss are not actually shown on your 1040. Instead, if you grind out your tax return by hand with a good old-fashioned pencil and paper, you'll have to calculate them using various supplemental worksheets. Or, more likely, if you use tax return preparation software, the software will calculate them for you behind the scenes, and then will typically generate the calculation worksheets for your reference. Without further ado, here are the 6 different MAGIs you're most likely to come across in planning for your retirement. First is the MAGI used to determine your eligibility to take a tax deduction for your contributions to a traditional IRA. For this MAGI, you start with your AGI straight off your Form 1040, but without any deduction you may have taken for a traditional IRA contribution. And then you have to add back in various adjustments that may have reduced your AGI. Specifically, you have to add in any student loan interest deductions, tuition and fees deductions, foreign earned income and or housing exclusions, foreign housing deductions, excludable saving bond interest, and any employer-provided adoption benefits that reduce your AGI. The next MAGI is the one used to determine your eligibility to contribute to a Roth IRA. This MAGI is actually quite similar to the one we just discussed. First you start with your AGI, and then you subtract any Roth conversions you did for the year. This is important to know. While Roth conversions are typically taxable and therefore included in your AGI, for purposes of determining your eligibility to contribute to a Roth IRA, conversions do not count against you. In other words, they are not included in this MAGI. After backing out from AGI any conversions you did, you then add in any deductions you took for making contributions to a traditional IRA. And then you similarly add back in all the other things that were added in the previous MAGI. The student loan interest deduction, tuition and fee deduction, the few foreign deductions, the excludable savings bond interest, and the employer-provided adoption benefits. This third MAGI is by far the simplest. It's the MAGI used to determine if you will have to pay additional premium amounts for Medicare. These surcharges are known as IRMAA, or Income-Related Monthly Adjustment Amounts. This MAGI starts with your AGI and simply adds to it any tax-exempt bond interest, such as interest you received from owning municipal bonds in a normal brokerage account. This next MAGI is the one used to determine your eligibility for subsidies on the premiums paid for health insurance coverage purchased under the ACA or Affordable Care Act. For those enrolled in ACA plans and whose MAGI is below certain levels, the government will subsidize some of the premium costs by way of giving tax credits. This MAGI starts with AGI, and like the IRMAA MAGI we just discussed, it adds in any tax-exempt bond interest received. Next, while it doesn't spell it out as clearly, you have to add in the same few foreign income and housing exclusions we mentioned before. Those exclusions are shown on Form 2555, which is what is referenced here. And finally, you have to add in any non-taxable Social Security benefits you received. At the federal level, no more than 85% of your Social Security benefits are taxable. That means your AGI won't include 100% of your Social Security. It will be 85% at most. The MAGI for ACA premium subsidy eligibility makes you add in the portion of your Social Security that was not included in your AGI. The fifth MAGI I want to discuss is the one used to determine when you're subject to the net investment income tax, or NIIT. NIIT is something most people don't know about, and because of that, it can take you by surprise. The net investment income tax is an additional 3.8% tax you may have to pay on your sources of passive income, like dividends, interest, and capital gains, if your MAGI is over a certain level. The MAGI used for NIIT starts with your AGI, and again adds back in the few foreign income and housing exclusions that we've discussed for some of the other MAGIs. And then it also makes you add back in any reductions to your AGI you had as a result of owning controlled foreign corporations, otherwise known as CFCs, or passive foreign investment companies, or PFICs. Practically speaking, most people won't have any of these foreign-related items to account for. As such, in most cases, this MAGI will simply equal AGI. The final MAGI I want to discuss isn't technically a MAGI at all. That's because, unlike the other MAGIs we've discussed, this one doesn't actually start with your AGI. Though practically speaking, you can functionally think of it like another MAGI. This MAGI is actually called Provisional Income, and it's a measure used in determining how much of your Social Security benefits is ultimately taxable. Recall I said before that no more than 85% of your Social Security is federally taxable. This quasi-MAGI or provisional income measure is what's used in determining that percentage. It starts by taking the gross amount of Social Security you received, but then multiplying it by 50%. In other words, it starts with half of your gross Social Security benefits received. You then add to it all of the other taxable amounts of income that are included in your AGI. That includes wages, interest, dividends, taxable IRA distributions including taxable Roth conversions, taxable pensions and annuities, net capital gains, and all other taxable income shown on Schedule 1 of Form 1040. Next, you add in tax-exempt interest, again typically from interest paid on municipal bonds held in a normal brokerage account. Then, you subtract out any of the cash charitable donation deduction you may have taken for 2020 as shown on line 10B of the 2020 1040. And you also subtract out all the other miscellaneous Schedule 1 deductions except for the student loan interest and tuition and fees deductions. The result is your provisional income. This one is definitely one of the more complicated measures of MAGI, as you can see how many individual items you have to add and subtract here. Well, that's it. I hope you found this video helpful. As you can see, there's no single measure or definition of MAGI. It's all going to depend on what particular provision of the tax code you're talking about. As I mentioned before, this video doesn't address what to do with each of these MAGIs. It only explains how to calculate them. If you're interested in seeing how these MAGIs actually come into play, check out the rest of my channel, as I have videos that address most of these things in more detail, such as how much Roth contributions can you make, how IRMAA is calculated, how to figure out how much of your Social Security is taxable, and so forth. So please be sure to like this video and subscribe to this channel. If you haven't already, subscribe to my monthly newsletter, Retirement Planning Insights, which provides informative retirement planning tips and info. And be sure to join my free Facebook group, Taxes and Retirement, where you can learn all about tax-efficient retirement planning. Thanks for watching. I'll see you soon.